Welcome to the Swing Trading with Cycles channel. It is January 7th, 2023. We're going to do an update on the DXY today, the US Dollar Index. And we will start with the big picture chart. And the headline here is that the US Dollar Index is in a downtrend on the quarterly chart. This is a monthly chart here, and obviously if it's in a downtrend on the quarterly chart, it's also in a downtrend on the monthly chart. But let's look at this current monthly candle. I always talk about on this channel, one of the goals is to help people not lose money in the markets, right? Like that is step one. If you can avoid losing money, then you have a good chance of profiting. But step one is protecting capital. And one way you do that is understanding price action. And why is that? It's because prices trend. That's the simple premise. Prices trend. Sometimes they trend higher, sometimes they trend lower, and sometimes they're just consolidating, moving around in a range. You want to make sure you're on the right side of the trend. If it's trending up, that's the time to be long. If it's trending down, either get out of the way if you're aggressive, you might enter a short. And so one of the first things you look at is the character of the candles, right? So like these are monthly candles, and that's probably where you start. It's a pretty good time frame if you're thinking about a trade that's going to last for a few weeks or even a few months. How is the monthly candle looking? So two things you want to look for. Is the candle green or red, right? If it's green, it means price is moving higher. If it's red, it means price is moving lower. It's really that simple, right? Green means it's above the opening price. Red means it's below the opening price. And the second thing you want to look for is the candle making a higher high, or is it making a higher low relative to the previous candle? Or is it doing none of the above? Is it doing neither? So in this case, the candle is green, right? So that is the first criteria. Now, there's a catch, right? There's a big catch. While this is a green candle for the DXY for the January candle 2023, it's obviously really early as well. We've only had the first week trading. So this candle has a lot of ways to go in terms of what direction it can go in. But notice this pretty massive upper wick. An upper wick is always a pullback on a lower time frame, right? And so we're seeing an upper wick on the monthly chart, which means we're getting a pullback on the weekly, which means we're getting a pullback on the daily, etc., all the way on down the levels. So this is bad. So even though this is green, it's on its way to going red. It doesn't mean there's a guarantee that it'll go red. There are no guarantees in markets or really life in general, but it's on its way. Like, because think about that. Let's just zoom in to make sure everyone can see this candle, right? You see this candle here. At some point, it was all the way up here, and then prices pulled back all the way here. Now, the important mechanics here are the opening price is 103.494. So, and we're right here at 103.911. So, if we break down below 103.494, this green candle becomes red. And that means that it's moving lower, right? As we said, a green candle is moving higher, a red candle is moving lower. Now, is it making a higher high or making a higher lower low? So the low from last candle was 103. December candle is 103.391, and our low so far is 103.469. So we haven't made a lower low. We also haven't made a higher high. So that's called an inside candle, just inside the range of this candle. And as I zoom in here, you can see that, right? This wick here doesn't get above this high. This down here doesn't get below this low. And so it looked like we might be on our way to making a new high, and then price pulled back. That's exactly the kind of behavior you expect in a downtrend, right? Again, another way of thinking about that is it's a lower high. Look, you can see with your own eyeballs. This is a high right here, on this red candle, and this is another high. This high is lower than this one. That's what you would expect in a downtrend. All of this is not good news for the dollar, but it's great news if you understand how to read a trend, so you can either get out of the way or participate on the downside with like puts on UUP as an example. And so I'll take the drawings off actually, and then move on to the quarterly chart. And this is one of the charts I've been sharing on Twitter. If you're not following, definitely want to look for a link in the description. But this was the candle from Q3 2023, and this is our Q3 2022, and this is our Q. I'll zoom in on these so you can. I just want to make sure you can see these in all their glory. So that this green candle is Q3 2022. This big red candle is Q4 2022. We just talked about this, right? Color of the candle, and is it making higher highs or lower lows? This is obviously a big fat red candle, so that's bad. And it also made a lower low. And not only did it make a lower low, it closed below that low, meaningfully below it. And so now we have this candle, which is, the Q1 2023 candle. Obviously a long way to go before this thing closes, but it's a bad start so far. It's consolidating at the lower end of the range. And of course, we just talked about, there's a pullback happening on a lower time frame. And so we're going to look for a move below the low of this candle, which again is 103.391. And so that's our quarter. And we talk about a downtrend on the quarterly chart. That's how it starts, right? We made a lower low here. And now the expectation is the next move will be a lower high, and then another lower low, and then another lower high is the idea. And I would expect this to continue for all of 2023. Now, that can change. That could absolutely change. Let's say this candle, this monthly candle, we just have some kind of crazy bullish revert. Or actually, let's say we do nothing in Q1, like this candle ends up like just kind of oscillating a little bit, but doesn't make much of a lower low, also doesn't make a higher high. We could end up having a Q2 candle that looks like this, right? There's absolutely no reason why we can't, right? And if we did get a candle like this, that would obviously invalidate, that would mean we're not in the downtrend anymore. That would mean we've broken the quarterly downtrend, and that would be an awesome opportunity potentially to go long. The thing to realize is you don't get a big fat quarterly candle like this without getting bullish candles on the daily and the weekly and the monthly. So if you're going to get a massive reversal like this on the quarterly chart, it's going to happen over time. It's not going to happen overnight. So you'll have time to position yourself if you know what to look for, if you know what you're doing. And so let's move into those lower time frames that we're talking about. So this is your weekly chart, and as we talked about, massive upper wick building here. So that's the same upper wick that you're seeing on the monthly. And my expectation is at some point we'll get a bit more of a rally. That's what this line is here, but then fail into a lower low. We'll get another rally and then another lower low. This is what you could kind of expect for the year. Again, that could all be invalidated by let's say one of these weeks we get a massive weekly candle that looks like that, right? And takes out all of these lower lows that we made on these weeks. Let's say we take all of those out with 1 week, a huge candle. And it could happen. There could be some catalyst that happens, some macro thing that people pour into dollars. It could absolutely happen. What you have to ask yourself is, what are the odds? And also, again, if it does happen, you will be able to position yourself for it as it's happening if you know what you're looking for. And finally, we go down to the daily chart, and you can see this big bearish outside candle, right? It makes a new high. I'll zoom in, just make sure everyone can see this. It makes a new high above this previous candle, so you see this big wick up here, and then it also makes a new low and closes below there. This is generally a sign of more downside. So we kind of went backwards, right? We started with the quarterly and monthly, and now we're down at the daily. So think about it. That pullback on the monthly candle, that's this big red candle on the daily. And if we continue to see follow through to the downside on the daily chart, we're going to see follow through to the downside on the weekly, and that's going to cascade to the monthly, and it's going to turn it red, as we talked about. And so that's what you want to watch for, right? I suspect the DXY is going to continue to fall into late January at least. If anything, it looked like we were trying to start a little bit of a rally here, and then it completely petered out. We obviously have the big CPI number on January 12th. That's the next big catalyst for the markets as a whole. And then we have the Fed meeting, Feb 1, so you do want to watch for those. But that is the general kind of lay of the land for DXY. And as we talked about in previous videos, if you think about the cycles perspective of this, we topped out on month 20 of a long-term cycle that is generally around 36 months, and we're here on month 24. So that just tells you, easy math, we have quite a bit more downside to go, and that's why I say you could expect this to continue for really the rest of the year. Other kind of milestones you can look for on this chart. This teal line is a 50-month moving average. I could see a world where we have a date with that, as I've talked about in previous videos. This kind of zone here is what's going to really tell us how much lower we're going. I suspect we're going to get into this zone, and it's going to be a question of how does price behave once we're in this zone again between these red lines. Are we going to test like the low 90s, maybe even like the 88 area? That's That's gonna be determined in the next few weeks as we understand like the magnitude of this decline. But this top that came on September 2022, I want to just look at a couple of other examples. So like these are other tops. So this was the top after COVID. So we won't look at this because it's not super like. So let's look at this one, right? The top that came on January 2017, right? So we got a top on January 2017. That was month 32 of the cycle, and then we essentially fell for another 13 months. So if we look at the weekly chart for that, and we probably don't have the cycles like numbered per se, but we just really want to try to get a ballpark. So this was your top right here. So that top that we just looked at on the monthly chart, this is the weekly version. This is the weekly. Another way of saying that is this is the weekly candle that caused that monthly decline. And so this is where you get your top, and you can kind of see, right, we decline for 5 weeks, right? So we get a little bit of a low here. We then get a little rally for 4 weeks, and then we decline basically. Like it depends. You can kind of call this is a little consolidation. So we decline for like 11 weeks, then we consolidate for a little bit. And then the bulk of we get another sort of 12-week decline. So you kind of think about this. You have 11 weeks of declining, or this is 12 weeks of declining, 11 weeks of declining. So that's 20, what is that? 24 weeks, 30 weeks. So like 30 weeks of declining. And this is, interestingly enough, this top happened in January. So it is pretty much a full year. So that kind of gives you a picture, just really, really big ballpark. You know, you think about it, you have 52 weeks in the year. How many weeks are we going to spend in a downtrend versus an uptrend? This kind of gives you a ballpark. It could be quite a bit, right? This was another top here where, you know, like right here. And again, these tops obviously each happen for their own reason. So I'm not saying that, like, of course, the reason the dollar topped in the 70s or 80s or wherever it was different than why it did this time. But price action is price action. So you have this 9 weeks of decline, another 9 weeks of decline, and then 17 weeks of decline. So what is that? 18, so almost 35 weeks. So that could be, I mean, it could be a very profitable year for being short the dollar, which, you know, by correlation means other things that tend to move inversely to the dollar should do well. But again, I'll continue to say this can all be invalidated by basically breaking the swing high. And just to be clear, what swing high am I talking about? This is what, like, so let's go to the daily chart. This is what started it all. This swing high here on September 28th, which caused this swing high on the weekly, right? And that caused this swing high on the monthly, right? So below 107.68, we have a swing high on the monthly chart. So below there, you can see, like, so below this black line here. So first things first, we need to get back above that price, above 107.642. So what is that? That's like another 3 or 4% from here. And that's the thing about this. The percentages are not very large in absolute terms, although they are pretty big, like in relative terms for the index itself. And so you absolutely could have a big macro event that completely upends things. But you want to play the probabilities. And again, in that scenario where we had that big macro event, the trend would still play out over the course of days and weeks. You're not going to just have a massive quarterly candle that shows up overnight. Like you wake up and there's a huge, you know, quarterly candle. The downtrend has been reversed. So it does give us a kind of sense. It does give us a kind of sense of very, very clear levels. Got to get above that 107.642. And on the weekly level, that swing high is, we then need to get above 111.576. So we kind of have to work our way up the swing high. So if you look at this kind of projection, we'd have to do something like that, right? Like eventually, right? And then obviously something like that, and, you know, without the lower low. Like that could, this something like this could play out, right? There's no reason it can't play out. It's just, right now we're in a downtrend, and so generally trends continue. There's no reason we should think that it's going to just reverse automatically. we'll want to see evidence that it's reversing and then potentially position ourselves that way. So that is the update on the DXY. Expecting a bearish year, very bearish year.